The stimulus is in focus. Lawmakers are gearing up for a House vote on the proposed $1.9 trillion stimulus bill this Friday. This coming as the Biden administration announced plans for changes to the PPP loans in order to better assist small business. The changes include focusing on minority-owned businesses as well as those with difficulty getting forgivable loans. Joining me right now to talk about that and the state of business today is the former CEO of Walmart USA, WSS Venture Holdings president and KKR senior advisor, Bill Simon. Bill, it's great to have you this morning. Thanks very much for being here. Your reaction to this bill in Washington, how are you expecting this stimulus to affect the retail industry?
Well, I think some of the stimulus will get through. You know, what form or fashion ends up coming through, I still think remains to be seen. We do need a bridge to get to the other side. I think we're getting close to the other end of this thing, but the consumer and many, many small and independent retailers need the help to bridge their way. Otherwise, we're going to be in a completely different place. So I'm happy that it's progressing. I do agree with you. There's a whole lot of stuff in there that probably needs to get a good look at. And if it's not COVID related, maybe they ought to wait on that.
Yeah, especially since you're talking now about $5 trillion in money hitting the economy in about a year. I mean, at some point, you've got to say, wow. I mean, if it hasn't worked and had a significant move yet, then we need to open the economy and see if actually GDP will move with business normalized. Let me get your take on jobs in America. The Wall Street Journal this morning with a great piece on employment in blue-collar sectors like construction, warehousing, reaching pre-pandemic levels, while overall employment is roughly 5% lower than February 2020. Bill, e-commerce is playing a big part in this. What's your take on the blue-collar workforce beginning to benefit from a strengthening jobs market, it seems?
Well, I think that's exciting for the country and the economy. You know, we've went through a real long period where, you know, the only jobs that were available were service jobs in restaurants and in retail, and they're great jobs, but they don't have the career progression that you might like to see from manufacturing or industrial, these blue-collar commercial jobs in warehousing and in construction. So, you know, the combination of the housing boom that's underway, I think, and the, you know, the adaptation of retail to e-commerce and the warehousing and forklift drivers, it really given a boost to employment, and that will drive overall wages up. And that's really the best way to move wages up. There's a lot of discussion about the starting wage or minimum wage, but that's really not the important number, Maria. The important number is the progress and a person's ability to move through the wage cycle. Nobody wants to be be paid minimum wage, whether it's $12 or $8 or $15. They want to see themselves progress through those wage scales. So I think this is just fantastic. That's where we need to be.
I think this is a really important point that you make, Bill, and I want to drill down on it in a moment because $15 minimum wage reportedly will cause job cuts because there are certain small businesses who will not be able to make it if they have to pay $15 an hour. What are your thoughts on the implementation of $15 an hour and what that's going to mean for retail? I know it's bifurcated, but who gets hurt most? Where do you see the real impact?
Well, I think, you know, first you have to acknowledge that there's a noble cause behind $15 minimum wage, and I think everybody wants to see people progress. But markets really drive wage. And, you know, prior to COVID, we were at a place where it was very difficult to hire workers, and wages were naturally progressing. And while today federal minimum wage is $7.85 or something like that, nobody's paying $7.85. If you try to hire somebody at that, you can't get them. Even Walmart's paying $11 and Target's $12 and $13, and they're on their way to $15. That's because it's been market driven. And when the economy is good, you can see wages move up. But in a recession, to try to, you know, have a $15 minimum wage, or even in a time when you have underemployment, you're going to end up never ordering again at a fast food restaurant from a person. It's going to all be kiosk. I mean, there's going to be a huge structural change in the way we operate business, and it's going to hurt small business. Large chains, retail chains, restaurant chains have the wherewithal to be able to figure out and use technology to avoid that and have some room in pricing. But small independents, both restaurants and retail will struggle with this, and likely will see challenges in how they go forward, how many people they can hire, whether they can even stay in business.
Meanwhile, a big story around Kohl's this morning. The Wall Street Journal breaks the news that a group of activist investors with a big stake in Kohl's want to take control of the department store's board. This is according to people familiar with the matter. The group includes activist investors. Where do you think this is going? And give us your take on Kohl's as a competitor to Walmart, and whether or not you are expecting consolidation in the sector.
I've always been impressed with Kohl's, and they're a great operator, have been a great operator. They've struggled through COVID like many retailers, largely because they have a large percentage of their business in apparel, and nobody's been buying clothes. But towards the end of this year, Maria, we're all going to realize that the clothes that we have are old and not in fashion, and we're going to have to go out again, God willing. And those retailers, and I really like Kohl's for the back half of this year. They're one of the people I've been looking at, one of the companies I've been looking at. They've done a wonderful job through the pandemic, really revamping their online and digital business. They're really strong, and now I think they've improved their omni-channel capability. And as customers come back, I think they're really well positioned to see a rebound. The activists, and I think you have to respect activists when they get involved in your business. They're shareholders who want the best for the company, and there's always something in there that a board can learn from the activists. So I'm glad to read that they're also engaging with the activists, and hopefully they can resolve this. But I like Kohl's for the back half of the year. I think they're a good play.
So you've got investments throughout the retail space. How's business going right now, Bill? You've got a busy week ahead for the sector. Macy's, Home Depot, Best Buy, all reporting their quarterly earnings this week. This after Walmart posted mixed results last week. What's your take on business today?
Well, I think you're seeing mixed results. You're seeing some real strength in categories that are, have COVID tailwinds, and in just the opposite in companies that have, COVID headwinds. But like I said, we all expect that sometime during this year, hopefully sooner rather than later, those winds will switch. And I think the ones that have done well through COVID with the tailwind, they're going to have to anniversary or cycle those big numbers that they've been putting up. And the ones that have been in a headwind will suddenly find themselves with a tailwind, and their stock values have been beat down. And I think there's some opportunity there.
So is it still very much a bifurcated market? E-commerce is obviously winning. What else is doing well right now? And what's your take for the year and going forward in terms of where the strength is? Where is the growth in retail right now, Bill?
Well, I mean, you're obviously seeing growth in home improvement. Both Lowe's and Depot have done well. I think you're seeing a real strength in leisure. Sporting goods, Dick's, Academy, those guys are doing really well as people finding themselves with, a lot of time on their hands if they're locked down and limited things to do. So all those areas have done well. And I think some of them will continue to do well. I think habits have changed in some cases. And so you likely see that leisure business continue through the year. On the other hand, Walmart and Target to a certain extent, and Amazon basically had March and April and May to themselves last year. Everything else was closed, and if you wanted it, you either had to go into a Walmart or a Target or order it online and have it shipped to you. That's not going to be the case this year. They're going to have a difficult time cycling those numbers, and I think you saw that in Walmart's announcement. And then ones that have had really struggled and were closed, we'll see, really large growth because, cycling zero when you were closed is going to put up a really big number.
Yeah, that's a really great point. And one of the reasons that we're looking at a beautiful chart of Walmart actually over the last year. Bill, it's good to see you this morning. Thanks very much.
Thanks, Maria.
I will see you soon. Bill Simon joining us.